Well, hello everyone, and welcome back to another episode of our Southern California housing market update. My name is Stephen Meade with Domicile real estate for people who love houses. And if you do love houses, definitely check the description below. We launched, I think this might actually be my favorite listing. The pictures are beautiful, but really what it feels like to be in this house is just enchanting and magical. And I don't know if I can say anything other than that really captures the feel of it. So definitely check that link below and check out the photos. And believe me when I tell you, the house is 10 times better in person. So, all right, let's start off this week. I want to tell you about kind of where people are at, what we're hearing about, and then we're going to launch into the statistics because we kind of have a lot in the stats this week, something in particular, especially that I think is extraordinarily important. So one of the things a lot of people are asking is what direction is the market heading? They've noticed a definite shift out there. And we have noticed that shift too, and we're seeing a market that really is all over the place. One house will sit and have price reductions. Another house will get multiple bids and go for 200,000 over asking price at the same time, right? Like we've really got some conflicting information, and it's a market that it is very much dependent on what the house is, and buyers are being picky. I think that's the biggest hallmark of this market is that buyers are still very much interested in what they want, but they're not willing to overpay for a piece of junk or something that is undesirable to them. And I think that is a huge change from maybe 2 or 3 months ago, where people were just happy to get a house, any house. But let's launch in because I have an update on something that we've talked about in a couple episodes of the past, and it's a very interesting update that I want to go ahead and come back to you guys with because I'm not going to lie, I think it's something that realistically is extraordinarily important. So let me go ahead and just cue this up here. For once, I actually didn't have the stats file up, but I will have it up in just a second here. So let me go ahead and do that. And let's get this up for everyone so we can take a look. All right, here we go. So first off, let's talk inventory, total active listings, and where are we at with these? If you look here, we are up, and we are up over at the same point we were at last year. And I think that's very important to understand if you're a buyer and a seller. So if you're a buyer, congratulations, you actually have choice. You can be picky on what house you want to buy. Now, that doesn't mean that house you want will be available at a discount, but it does mean you'll have more selection, and instead of running up against 20 offers, maybe you're only running up against 5. If you are a seller, understand that buyers will not feel lucky just to get a chance at buying your property. I'll repeat that. Buyers will not feel lucky just getting a chance to bid on your property. This means you need to prepare your files for listing. This means you need to make sure that your home is listing ready and the most attractive it can be. There is a very big difference between the most attractive homes in the market and the least attractive homes in the market. Alrighty here, so moving on. If we go to our last 14 days, new listings, we're seeing some enhanced listings coming up in this $1 to $2 million range. But what we're not seeing is we are not seeing a flood of listings coming to market. And what we are seeing is more listings sticking around. And I think that's the perception that buyers have. It might feel like there's more coming up, but if you'll notice, under $1 million, we are way under for last year, and $1 to $2 million, we are a bit over. These even out. I'd say it's about the same number of new listings as we had last year, but more of those are sticking around, and that's really making a difference for buyers. And if you're a seller, you might be noticing that you have some competition. New escrows, these are down versus last year. I don't think that's entirely surprising, and that makes sense mathematically, right? If new listings are the same, but inventory is going up, that must mean new escrows are down. They really have kind of been at this lower level and remained fairly flat. I think we're down a little bit this week, but we were up a little bit last week. They're actually holding steady, and I think that's important to note. I think there was a perception in the market, right, that buyers have just stopped looking, but that's not true at all. We are, in fact, are still very much seeing buyers out there. We're just seeing it at a lower level, albeit a fairly steady lower level. If we look at our absorption rate, hardly a surprise, that has dropped a bit. For our under 1 million, we are still in that mid 70s, which I'd say is still a strong market, but we've actually dropped below that for our $1 to $2 million range. So what does this mean? If you're a buyer in that $1 to $2 million range, things are getting a little bit easier for you, especially if you're willing to look at one of those homes that may not be perfect, either with something that can be fixed or something that can't. Closed prices is kind of interesting. Remember, this is based on 4 to 6 weeks ago. We are seeing some softness at that top end, that 75th percentile. But believe it or not, our median and our entry level are actually holding pretty steady on prices so far. And then if we look at our percent still active after 14 days in the market, these numbers are in fact quite a bit higher. Again, they are looking a lot like those numbers from last August, which I would say is probably the weakest point of 2021. If we look at our list to close ratio, that is also still holding very steady though. Buyers are still in the mode to pay over, especially when it's a house that they like. So here's what I mean by this. I'm gonna go off share for a second. This is really a tale of two markets. We have the homes that are getting bought and going into escrow, and those are competitive. People still love them. They are bidding over list price to get what they want. Then we have everybody else, the homes that are sitting. They are not going into escrow quickly. And you really have to make that distinction, right? If you are a seller, you want to be in that first category. You want to be the listing that people are after and that they want. If you're a buyer, guess what? Guess where the opportunities are? Are they in those listings that everybody else wants? No, they're in the listings that nobody else wants. And there are actually some deals to be had. You know, this week we had a home for a client where we offered over 100,000 over list price and we did not get it. We had another home where we offered over $100,000 under the original list price and we got our offer accepted same week. So that just tells you how different these two markets are. Okay, jumping back in here, if we look at our days on market for new contracts, this again tells you that for the desirable homes, the market is just as strong as ever. We are not seeing these days on market go up. These are the homes actually getting bought and going into escrow, and their days on market counts are not going up. How about that? And here we are. I want to talk about what this means for a second before I show it to you. So one of the things that we have talked about, and I think that is really on everybody's mind, is how much payments have jumped on the median priced home, right? We've seen in the last 90 days, because of rising interest rates, that payment just shoot up towards the moon. And I think there's this question of the market can't take it. There's going to have to be an adjustment. And I'm not saying there's not going to be an adjustment, but I think that adjustment, if it comes, will be significantly smaller than people think. And because of some data that we have now this week, I feel even more confident in saying that, and I'm going to tell you why. So let's start off here first. We are going to talk about inflation, right? We're going to talk about what has happened to inflation in that market. Inflation is our CPI index here, indicated by our red line. It came out in this past week. And we see that it has risen steadily and gone up faster and faster, but it is not at all kept up with this payment index, right? The payment index is the blue line, right? You see inflation, payment index, and then here we are at the beginning of this year, boom, it went up, but it has actually leveled out quite a bit. That's important to understand, that there's been a bit of a ceiling with respect to where this payment is. So just to give you guys some reference, versus June of 2018, the current payment on a median price home is 60% higher than it was 4 years ago. Have wages gone up 60% over 4 years? No, though I think they are rising. Then we have our CPI index. Our payments have far exceeded that, right? And I think when you start to see this gap, this is where the Fed starts saying things like, homes are overpriced, people are irrationally buying homes. But they are wrong, and I'm going to tell you why the Fed is looking at the wrong numbers in their predictions. We decided to create a rent index. And the rent index is basically where we examined the rent on a median priced single family home. So the median rent on a single family home back in June of 2018. So we started at the same point. And if you look through 2021, it really mirrored where payments were going, right? Then payments started going up and they just shot up. And look at this gap between the median rent and our median payment. But look what has happened in the last couple of weeks. The median rents have shot up, closing this gap. And just to let you know, we run this statistic. We've been running this as a trailing 2 weeks. And what does that mean? It means we look at all the rent, all the single family homes that were rented out in the last 2 weeks, and we come up with a median. And by the way, for LA and Orange County, this sample size is like 700 houses. This is not a small sample size, right? So I don't think this is noise. We literally watched a 10% jump in median rents in the past 2 weeks. So what does this tell me? It tells me that we are more likely to see the rents jump up than the housing prices drop, because this disparity does have to be addressed, right? Like, this cannot exist in the long run. Something does have to give. And if you are a buyer, unfortunately, what's giving is not home prices. What is giving is those median rents on single family homes. They are skyrocketing to meet this price. And when you think about it, it actually makes a lot of sense, right? If you have 100 people out looking at homes in an area and price range, right? 100 buyers. Now, because interest rates have gone up, now you only have 50 buyers looking in that price range. Well, where did those other 50 people go? Did they just disappear? No, they went back to the rental market, right? So they, in fact, induced a run on the rental market to jump up prices. And that's how our equilibrium comes back. And the reason why this is happening is because we are in a housing shortage. We do not have enough units of housing. So before, we were in a housing shortage and an inventory shortage, right? Meaning there weren't enough homes to buy. Now our inventory shortage is easing, but we still don't have enough houses. And that's the reason why, if you take buyers out of the buyer pool to buy homes, they're going to be shoved back in that rental pool. And that's going to cause rents to go up. And that is exactly what we're seeing. And this has a very great bolstering effect on home prices. Now, in the long run, will some of these people get fed up and maybe move to other climates or other locales? Will they go to other geographic areas? That's possible in the long run, but it's not really a short-term response. I also think a lot of other markets have actually seen larger rent gains than California. So I don't know if there's that much relief going somewhere else, at least not in the short run. Okay, so that's kind of the big one for today, folks. Now, if we look at our prevailing mortgage rates, thank God this curve has started to flatten out, right? We see this big jump and now it is flattening out. I hope that trend continues. It adds stability to our market, but we will just have to see, because predicting interest rates is not easy. And if I could do it, I would be a bond trader. In fact, no, I would be a retired bond trader, and I would be sitting on a beach with drinks with little umbrellas in them, looking at my portfolio. I would not be doing videos on YouTube. Anyhow, everybody, thank you for watching. Once again, definitely take a look at our new listing on Steinway Circle. This is, I think, one of the most amazing homes I've listed in the past few years. It is spectacular and worth your look. If you love Scandinavian design and modern architecture, I really can't think of a better house. And it is priced under $1.5 million. So it is in the realm of stretchable for a lot of people. Obviously, take a look down below, 25131steinway.com. We're having a sneak peek this Thursday, May 19th, 4 to 6 p.m. Definitely take a look. We'll see you again real soon. Do not forget to like, subscribe, and hit that notification bell. And as always, questions, comments, we love them. We'll see you again real soon, everybody.